Once you have your buying and selling targets, you're going to want to use limit orders, not market orders. When you use a limit order with your brokerage, it means that you're not going to sell or buy until it hits that price. So you're either going to get your price or better than your price. For example, if the asset opened the day higher than your sell order, you would get that higher price or at least your limit price. If an asset opened lower than your buy order, you would get it at least at your buy price or even lower based on where it opened and when your order could be filled. So if you work a full-time job like I do, you can either do it after hours when you get home from work, or you can spend a little time on the weekend and just do some analysis, plug in your buying and selling plan, and let it go. This also provides you with a side benefit. You're not going to have your emotions affect whether or not you make a buy or sell during the day based on price action, because you're going to be working. Your plan is going to execute the way that you originally intended when you thought about it without any emotion being involved. You've successfully removed FOMO from your plan. When it comes to buying into a bull rally, it's also important not to get over exuberant. In other words, buy in stages and use smaller quantities. You should always be patient and not buy all at once, because you can always buy at higher prices, but you can't free up capital to buy at lower prices if an asset sells off. If you're all in and you're a disciplined investor, you shouldn't put more money to work. You should only have that set amount that you're willing to risk entirely. So if suddenly the asset sells off to lower levels, you just miss out on that buying opportunity to buy if you don't have money on the sidelines. And regardless of whether we're in a bull market or a bear market, I have one key rule that I follow all the time. I only buy on red days and I only sell on green days. In other words, I won't panic sell when the market is selling off in a big way. I'll wait for it to bounce and go back up before I take any profits. And the same works in reverse. If the market is taking off and just having green day after green day, I'll wait for it to pull back before I buy. This way you can typically get a much better price than if you just FOMO'd in and bought on the way up or panicked and sold on the way down. The great thing about investing is that it affords creativity to all of us individual investors. You find the investing style that works for you and you follow it. Ignore what anybody else says. As long as you find techniques that work for your investing style, that's all that matters.